Because you beat on the top, you beat on the bottom line, your stock goes nowhere. Why?
I would say, first of all, earnings season, I mean, we tend to think sort of, in a two-variable world. We are getting earnings, and definitely, earnings are very good, and I would argue unambiguously good, not just about the past quarter, but also, what they're telling us basically about future earnings. But I think it's important to keep in mind, number one, that we've been sort of, in a pullback since the first week of February, the 2nd of February, to be very precise. And so you have to put it first in that context. Positioning was a big issue, as we argued at the time. And so, we were in a pullback mode. And then the question is, we got these great earnings. Why hasn't the market, why hasn't that really helped the market? And I would argue, again, number of issues, but predominant among them is a concern among investors that, we are very late in the cycle. This is peak earnings. There's cost pressure, so margins are going to go down, and so we have these great earnings, but they're helped basically by the tax cut, by the depreciation in the dollar, which is going the other way. Rates are going higher, so the list is very long. And what I would argue is, probably the biggest misconception is that we are so late in the cycle that cost pressures are just going to tip us over. I would argue that's a very big misunderstanding. If you look historically at business cycles, which is what equity returns are tied to, comes a point in the cycle, labor market tightens, wage inflation starts to inflect up. But a pickup in wage inflation has historically been always associated with higher margins, not lower margins. And you might say, well, that's a nice, thing. It happened historically. What about now? And what I would point out is, look at Q1 earnings, look at Q1 margins. They're a new high for the cycle.
And this is what that chart is essentially showing: average hourly wages versus net income margins for S&P 500 companies.
And what that doesn't really show hourly wages going up very much yet. And so we haven't really tested it. Maybe we test it actually tomorrow with the jobs numbers. If that shows really a big upper tick.
That's absolutely true. But if you were to draw vertical lines through, the kinks in the green line, you would see that basically as wage inflation picked up, margins picked up. If you look at Q1 margins, we are at a record, and that's definitely partly due to the impact of the cut in the corporate tax rate, because we are talking about after-tax margins. But even if you adjust for that, margins are still higher. So, this is happening. This is playing out. I think that, the reason for this misconception is, I would argue too much reading of textbooks. This variable goes up, this must go down.